coming up on today's episode.
Yes or no? Yes, you can discuss long-term strategy and everything like that, and that's probably a bit of a different conversation. But yes, depending on your ambitions and everything, it's very easy to qualify and give you a roadmap of what you need to be doing. So when you get wind of when you are thinking about it, that's the best time to contact a broker.
Dodgy advice and bad decisions can cost you big in real estate. We're here to make sure that doesn't happen. Welcome to the No BS Real Estate Podcast. I'm your host, Joe Agresta, and it's time to take control of your property journey together. Welcome back, everyone, to the No BS Real Estate Podcast, your listening how-to guide to the Aussie finance and real estate market. I'm your host, Joe Agresta. Now, what if the biggest risk in your first home buyer journey is not missing out on the property? What if the real risk is finding the one, signing the contract, and realising your finance was not as solid as you thought? Well, today we're unpacking the first home buyer mistakes that can cost you your deposit, your approval, your borrowing power, or at the very least, a lot of unnecessary stress. And I'm joined by Azem, Senior Mortgage Broker at OVM Finance. And in this episode, we're going to be breaking down the top 3 finance mistakes buyers make during the purchase phase, especially when emotions are high, the property feels right, and everything starts moving quickly. We'll also get into how brokers are paid, what buyers should check before they sign anything, and why having the right professionals around you early can stop small mistakes from becoming very expensive ones. So without further ado, Azem, welcome to the show and thank you so much for being here.
Thank you for having me, Joe. I look forward to it.
It's been a long time coming. We've had soccer matches in the way, we've had scheduling issues, and today I had a power outage. It's just been the podcast that never happens. So I'm actually so wrapped we are here.
I'm so happy too. I think it's been 3 weeks in the making now. Something always kept happening. World Cup got in the way. Australia was playing, so wasn't in the right mindset, but very glad to be doing this with you today.
Especially we've managed to keep it away from the soccer schedule, which is nice, which is going to be Saturday, I think at 4 a.m. So let's see how we go.
Yes, very important.
100%. I think the best place to start, Azem, is when I first met you, I really enjoyed having a conversation with you. You were just really down to earth, so understanding and very client focused. And I think that's why I really connected with you and why I wanted to unpack this specific topic with you today. So I guess for people who haven't come across you before, can you tell us a little bit about, your background, your journey and, what OVM Finance does?
Of course. So I'm Azem Ozcagli, Director and Senior Mortgage Broker at OVM Finance Group. So what we do is we basically try to ease the facilitation of the home lending process for first home buyers, investors. If you're looking to refinance or just level up or downsize your home, try and make that process as easy as possible and just navigate that as best we can with our clients.
And how did you kind of enter this wonderful world of mortgage broking? Where did it all start?
It was a bit of a happy accident, if I'm being completely honest. It was, what year was it? 2022. So basically I had a bit of a crossroads in my career. I was in retail management and for a few reasons I wanted to leave that industry and find something new. I didn't really have anything rock solid in mind, and just by chance kind of got an interview with a finance company and took it and got straight into it, was thrown in the deep end and quite enjoyed helping people with their finance. When I started, I didn't think it was the most important role or anything like that, but it was I kind of grew accustomed and liked helping people and letting them know that something that they thought was unattainable was not that difficult. And then it grew over me and, the client journeys and everything. And that led to myself and my other colleagues / business partners beginning OVM Finance.
Because it always starts with a personal kind of journey and story, right? It's not just I love numbers and here I am. It's, the more you interact and the more experiences and seeing people especially coming from that mindset of, I don't think I can do this. I think that's such a common misconception that people write themselves off before they even begin.
Yeah, it's sometimes you hear that and you're like, well, I can assess your situation. Like sometimes it's not as hard as it seems. People might know that a guarantor is an option with like a lower deposit.
Mm.
Now there's shared equity schemes, which you may or may not be a fan of, but it can help out some people in certain circumstances. So sometimes it's worth having a chat, and 10 minutes later you might think that it is doable. If not now, maybe in 3 months, 6 months, 12 months, etc.
What's the benefit, right, of talking to the broker early in the journey rather than assuming you can't do it? Because you guys ultimately can give them a plan, or you can give them an idea of, hey, like, you're not quite there. You probably need to save for another 2 months or 3 months, like, and then we can get started. Or, hey, you're actually ready to start. And I think that surprises a lot of people when they hear that too.
Yeah, for sure. It's a bit of a dopamine hit when you're like, oh, you actually qualified, or like you just need to save maybe another 5 grand to be comfortable, and it is something you can afford in that bracket. So, um, no, it never kind of grows old. I enjoy it more and more every day, and no, we love helping people.
And good on you for sticking to it. I think when
Thank
you
you.
find what you love, it shows.
Yes,
And what
yes,
I what I find so interesting too is you are currently working Melbourne hours while traveling overseas. So your day to
yes.
day must look so different to the standard broker.
Yes and no. It the the day, like the morning and waking, it feels very normal to what life was like in Melbourne. So for context, I'm not going to call it a gap year. I am working and traveling, um, which is one of the blessings of being a broker. So for about it's been about 6 weeks now. Waking up and I'm still looking at, I have all my gear with me, packed, have like a dedicated bag just for all my work gear. And I take that with me. I wake up early in the morning to work with Australian hours. And
Um,
I still look at the same system, still talk to the same clients. Everything is very regular in that sense. But then, I'll finish work. It could be 2 p.m. where I am and 5 p.m. in Melbourne, and I can go for a walk, go to the gym, explore, catch a train, and you're just in a completely different world. So it is very black and white in terms of like once the work is finished and you get a bit of downtime, it is completely different. But it's
yeah.
still kind of systems, like all systems go in the daytime, and it feels very regular, if that makes sense.
So it's just your hours are different, but they almost sound like they're better. I'd prefer an early start over a
Yeah, I
late
prefer it.
start.
Yeah, I prefer it. It can be difficult to get up at 6, but once you're up and you're working, then the 2 p.m. is very sweet. Yeah.
100%.
Yeah.
I envy it. I wish I could do that. I get up here at 6
Mm.
and I'm still not done. So,
Yeah, and it's like that sometimes too. Like I'll be working. There's been many
mm,
days where I'll be working till 5 6 p.m. local time, which is like 9 p.m. Melbourne time.
damn.
It's a bit of give and take, as a business owner. Sometimes I'll finish at 1, sometimes I'll finish at 4. It just depends. But I'm definitely making the
Yeah.
most of it.
Good on you. When do you have plans
Yeah.
to come back to Melbourne soon, or are you kind of still off indefinitely in overseas?
Not anytime soon. My partner would
Yeah.
kill me if I said anytime soon. She's enjoying it. Um, so no real timeline. If we had to, like, our best shot is like 12 months, a good 12 months overseas. I've been managing
Yeah.
quite fine. So yeah, it's gonna be. I feel like it's gonna be a very fast yet long um, remainder of my times traveling, but I'm definitely enjoying it.
Yeah, well, it's always cool to hear from you working in a different place or just doing it different. But it's nice to
Mm,
hear that there's some consistency, even though you're so
yes,
physically
has to
far
be.
away.
Has to be,
Yeah,
otherwise, yeah,
100.
I'd be very stressed if I wasn't. Yes.
True. So one of the big
Yeah.
misunderstandings, I guess, first home buyers have is around how brokers get paid. Can you explain that in simple terms?
Yeah. So if that loan settles, that lender will pay the broker a commission for introducing and managing that loan. So shouldn't be a mystery between home buyers and how brokers get paid. We do get asked that every now and again, and we do kind of, it is in our compliance reporting and everything that we do send out emails and everything with that information. So yeah, with simple terms, we get paid for introducing the loan and doing the work, and managing that loan from there on out.
So it's the bank really that's coming in and paying you guys, and it's just introducing the
Yes,
loan. But there's enough compliance and protections in place where you're not incentivized to go to one bank over the other based on how they pay out.
absolutely, absolutely. So they're fairly similar. Like most brokers don't really have a bias based on commissions. The percentages and everything are fairly similar. It's always, towards the best interest of the client and what's suitable for their goals. And the rest follows.
Because I think one thing I want to make clear to buyers that are like, oh, no, they'll just chase commission. At the end of the day, you can
Mhm.
always refinance, and that goes against the broker within the first 2 years. So it's not in
Yes.
like someone like Azem's not in the
Mm.
interest of, oh, let me just sign you up to the best comms, because then that won't work out long term for him either.
No, and it's important to note as well for those that are unaware that there's no like hidden costs. There's no like loaded interest rate or like monthly fee for having a broker introduce a loan. So it really is, and this is one of the reasons why I was incentivized to begin this business, and the business model. It really makes sense because it's a win for the client. First and foremost, they're happy, we're happy, we receive a generous commission, and the lender is happy because they've introduced the loan. So it really is a win-win, and the business model just,
Nice.
it really works.
Well, thank you for clearing that up for us, because it leads perfectly
Mm,
into our no BS statement of the day, which I always leave too late to talk about because I get so into the conversation.
mm.
So, today's statement, for those that are new around here, I say a statement that's a bit spicy, and then by the end of the episode, we're going to have Azem determine if it's bullshit or not. So we won't determine that just yet, but we'll read it out.
Okay.
So today's statement is, first home buyers are better off stretching a little for the right property than playing it too safe and missing the market. So we won't answer that yet, Azem, but at the end of the episode, I'll remind you, and we'll see where you land after we unpack the
Sure.
mistakes.
Sure.
All right,
Sounds good.
let's crack into it's sweet. So
Mm,
let's crack into mistake one. And mistake one is treating your maximum pre-approval as your real budget. Now, I think this is a common one. A buyer gets pre-approved, let's say, for $1 million, and suddenly $1 million becomes the shopping budget. So they're looking at properties
mhm,
in, usually, I think a common thing when I was an advocate was a buyer will start the range in your 800,000s, but then they'll end up with properties that go 1.1, 900 to 1.1 to 10, 1050. And it becomes a slippery slope. Pre-approved for $1 million,
mhm,
suddenly they think that their shopping budget's $1 million. And I think that's a common thing where they start looking at properties that are outside of their range. So, or they'll start their search at like 900,000, 800,000, but then
mhm.
they'll start to see properties on realestate.com for up to 1.1, 1050. And it becomes like a slippery slope from there. So in your own words, what does pre-approval actually mean? And then what does it not mean for the buyer?
So pre-approval is essentially the client or clients being approved by the lender to borrow a specific amount, and that number is determined by what we apply for essentially. So there's probably two ways we can go about it, and that's you can call it wise or unwise. One of them is just go for the max, and if have a certain amount of money and your income, which determines your borrowing capacity, if you want to max that out to, let's say, $1 million, and apply from there, and the lender gives you the approval, sure. Or if you want to be a little bit different about it, and same person or persons, and they want to buy a $700,000 property with that, with whilst being able to afford $1 million property, that they're within their budget. So it would depend on the scenario. So if we were looking at the scenario B, where it was, say, a couple looking to buy a property at 700,000, they're well within their means, yet maybe they see something, realestate.com advertisements, they can advertise for a little bit lower than what it will actually go for. So that same property, or they see another property that maybe is in a slightly better location, or whatever it is, going from 700 to 750, viable. I don't see that as a real issue. it's if you're absolutely maxed and you want that, you're at $1 million property and you want that property that's 1.1, you've got to think about, the extra taxes that are involved. If there's it, depending on your deposit size, is it LMI, is there not? So if you're stretching, we need to understand why. Is that for your benefit? Is it really what you want to do? If so, how are you going to get the money? Are you, do you have some money that
Mm.
you didn't disclose to us, or that was tucked away for an emergency, or bank of mum and dad can help? Whatever it is, we just need to have that understanding. So there's no real right or wrong answer. I guess it depends on your goals and your ambitions. But stretching when you can't afford it is definitely not a good idea and not something we would advise.
It can be risky. And I think that's where, like, I remember I had a friend once who was pre-approved for $1 million and she kept talking, "Oh, I've got this $1 million property in mind, $1 million property." And I'm like, if you max it out, isn't that a risk? And I remember she just said, "Yeah, but we really want the house. Like,
Mm,
it's really nice." And this is a couple of years ago. And I remember, like, a year down the track, she was struggling with the repayments really bad. And I think that was just more from the, you know, stretching to get that nice property because they could, then resulted in, the high rates coming in and rate
mm,
changes. And then that put a lot of pressure on how to
yes.
manage that loan going forward.
Yes, and if you are, at your maximum borrowing and you really like your heart is set on that, maybe locking in a fixed rate for 2 or 3 years just to have that peace of mind, depending on the climate. Like right now, the interest rates are really high, so maybe not as essential to go fixed, but maybe like just after COVID when the rates were low, and going from, if you're not fixed in that period and you're essentially
Mm.
maxed out, and then there's 5, 6, 7 rate hikes from like a low base, then you could be in a bit of trouble. The Australian system is quite uh, robust. There's buffers and expenditure measures like put in place, and that does safeguard
Mm.
to some extent. But at the end of the day, a buffer is a buffer. If you go over it, you can be in trouble.
A quick pause, we'll be right back. Here's a word from one of our sponsors who supports the show. If you're looking at short stays, or maybe you want to turn your own property into an investment or money making funnel, then talking to Belinda Markowski at Short and Long Stays is the person to speak with. She specialises in using Airbnb type of properties to make you an income on your next investment property, from converting rooms to maximising returns. She understands how to run short and long-term investment strategies from start to finish. Her details are in the show notes below. And I think, why do you think it would be, I guess, risky for someone who's buying their first home to kind of max out their amount and or use that amount as their actual budget and push it to that top limit?
The the risk is, look, the bank will assess you on your max, and if you couldn't afford the repayment, they wouldn't be lending you that money. So that's
Mm.
probably the first thing to address. Um, but yeah, again, rate rises, change of circumstance. If you're at your limit, there's just less wiggle room. So you could, God forbid, lose your job or have to work somewhere else, or something happens, an emergency, and these, the bank does approve you, but it doesn't safeguard you from um, future things that can happen to you. So taking that, maybe income protection and safeguards to kind of protect yourself and your family, if something bad was to occur from that position, might not be a bad idea. Like things like
Mm.
insurance or fixed rates, that kind of thing.
Yeah.
You're also probably doing a disservice, to future wealth building. So if you're just prioritize on, having that good family home, which, look, again, it's not our place to say if that's right or wrong. But
Yeah.
if you're looking at, building, an investment portfolio, or you want to invest in other assets, not outside of property, it really limits you into those sorts of avenues, because all your financial focus will be just on paying down the interest to your own occupied residence.
It makes complete sense. And then it kind of goes into, where we're talking about repayments and lifestyle, there's bills, there's all these like other factors that kind of come in. And I think after you get the loan approval and you get the loan, there's a whole other problem and probably a whole other podcast, about managing and
Mm,
writing out that loan, like how you survive it, because
mm.
it's one of those things that, do you think after, because that assessment that you give them is basically saying you can afford this based on your spending, how you live your life. And do you see these days a lot of your buyers are buying under their budget, or do they still creep up to the top end?
Creep up to the top if I'm being honest. Not all of them. Maybe it's like a 65-35-ish percent ratio.
Mm.
More so first home buyers, for sure. People buying
Yeah.
their homes to live in. With the current climate, rates, property prices still being, there's been a bit of a decline, but still being relatively high. Um, we do find clients, trying to borrow a certain amount that's close-ish. I'm not going to say max, but around
Yeah.
around thereabouts. Yeah,
Think that's the common one. That's why I wanted to unpack
yeah,
it today about first home buyers is like, how do we, how does someone like Azem help you budget for that or work around it and so you can still find something within your means, but have enough left
hmm
over to be comfortable? Because I think
Be,
it's two things. It's a big part.
you want to be comfortable. You want to be able to sleep peacefully at night. So even if you do get that dream property, and look, some people are so different. Some people would be like, okay, I'm going to hustle and I'm going to find a way. And we have dual incomes, no kids yet. We can, pick up extra shifts. And some people will have that determination, whereas some people might be a little bit more hesitant and a bit more, on the back foot and trying to build their, emergency accounts and everything like that and try and prepare. But yeah, I personally wouldn't max out. I would try to live a bit below and use those leftover dollars to invest in other avenues. But there, there's no right or wrong answer. That home could make you really happy, and that's what you want, and that makes you happy. We're not at liberty to say don't do that. But it's
Yeah.
completely their choice. Yeah,
Sure. And it's hard for you. And this is why I want buyers to realize that, listen to the advice you're given. Like if you seem to be pushing a budget or stretching, I know it's an exciting time right now because you're about to buy and you want to get
yeah,
that right home.
yeah,
But then it's the reality of living with that home that if it's not comfortable or it hasn't worked out, like you said earlier, job loss, emergencies, things happen all the time that you don't expect. And that's where those pressures come in. So just being, I think, responsible with how you push that budget.
yeah. And there's nothing wrong with not your first home not being your forever home. It's probably quite
Mm.
normal in 2026 where you might buy a home and that's your footing to get into your next home in maybe 5 to 10 years time. Using equity or whatnot. But yeah, there's definitely nothing wrong with getting something for the short term, maybe using it as an investment potentially
Yeah.
once you are ready to buy your forever home.
100%. And this brings me to mistake two, which is a big one and a common one. I think mistake two, applying online, everywhere without
Mm,
understanding the impact. So this is a big one.
yes,
This is like checking different lenders, filling out forms or, submitting
yes.
applications without understanding what's being recorded or assessed. So as in like explain to me, like what are some of the risks that I guess first home buyers, who are applying online or checking, all these application avenues multiple times, what's the risk without getting that guidance? Like what is the actual impact to them?
The impact is it will be, I'm not going to say a stain, it's going to be recorded on your credit report. So lenders have access to that. So they'll see that you've applied at lender ABC. They'll definitely have questions. They'll ask why you applied. What was the outcome? Why did you not want to proceed with them? Those kinds of things. And each inquiry does lower your credit score. So it can be one of the biggest kind of cautions for first home buyers, and especially like we're discussing, pre-approvals, assessing your situation at the time. We've had, and thank God, nothing. We still got good outcomes for these clients, but we've had
Mm.
clients get pre-approval, miss like a direct debit on their, water bill, whatever it is, and that can actually, if they don't realize it, it can actually record as a default, and then most lenders won't want to look at you, especially if you're in the first home buyer space with a government scheme. So have to be very cautious of your inquiries and not missing payments or anything like that, because that can definitely stay in your file, and banks won't want to borrow of you.
So frustrating. And
Yes.
it sucks because you've got to be so diligent in that home buying period, because I think a lot of people have their pre-approval and they're like off to the races.
Yeah.
And then one little mistake that it's such an honest mistake too. Like if you're renting and you've missed a direct debit, or you've
Mm.
missed some sort of repayment that was meant to be scheduled, it sucks that it goes against you, but the bank's observing your behavior at the end of the day.
Yes. Yes, and brokers often have to file like a report and say it was a genuine mistake, and causes a lot of it can cause a lot of stress to the client. So if you can avoid it, it's definitely best practice.
That's our tip of the day. Avoid it.
Tip of the day.
Just make sure.
Yes. Yes, for
And I
sure.
guess, and have you ever seen a situation, where a buyer like nearly got themselves into trouble because they tried to handle the finance side alone, like without going to a broker? So like they've tried other avenues
Hmm.
before they've come to you, and then they've come to you and you're kind of like,
Yes.
what have you done?
Yes. A few I have, and I will never forget this. One of my favorite clients, we have a very good relationship. Like it goes to the point where I know the family, and one of the best performances our brokerage has done is we did have a client who had a land loan. Now the land loan was already that was secured with the intention to
Hmm.
build. Yeah, the bank turned around to them and said, I think it was in a bit of a time where rates kind of maybe did go up a few times, and by the time the construction came around, had deposits on the line and everything, um, it was, we can't lend you this money for the construction. So then I get a
Oh
call and
shit.
I find out about the situation. I run through the scenario. I'm like, yeah, it's definitely tight, and I was racking my brain. I think I spent hours just thinking about it. It was so tight on so many different levels. We had to loop the parents in, um,
Oh no.
guarantor the parents onto the land, release
Yeah.
that with the guarantored property was already cross collateralized. We had to release that security and do a refinance of that one. Um, build free up the equity in the guarantored home. The parents servicing was tight on that as well. I think they had, luckily, it was the lender servicing was almost like it was in the red. This specific
Yeah.
lender had a policy where if they're in the health industry and there's a salary sacrifice, they'll treat that income as tax free up to a certain threshold. That was literally what got it over the
Jeez.
line. And
Jeez.
guarantor loan means the land is split, the construction is split, guarantor loans are also split. So both splits had a split. It was the most
That's messy.
the messiest deal that's ever come across. And funnily enough, today, like the morning of this podcast, we got the final invoice for the build, so they will be able to move into that soon. So
Oh,
happy ending.
how
But
good.
that was the that was a head scratcher for sure.
Well done. That's massive kudos to the work you guys do to to make it happen. I feel like it's so stressful, you know,
Yeah, it can be. It
as
can be, especially when there's deposits on the line.
because they'd already had the land, like the stress. And
Mm,
thankfully they had their parents to rely on. Because if they didn't, I think that would have probably put them in a lot more hot water.
yeah. There was a lot of things that just happened to work out on that application. The timing of it and everything, yeah, it was a bit of a stressful one. I think I spent like hours just looking at the screen thinking, what can we do? How can we make this work? And we got it to work in the end. It was a fantastic day.
Yeah, and I'm glad to hear that they're, now doing their final
Finally
build
now,
payment.
yeah.
That's exciting.
Yes.
That's so good.
Yes.
And I guess probably a lesson to other
Mm.
buyers, right? Like, at what point, in your opinion, should a first home buyer speak to a broker? Like, is it before they start applying to avoid these kind of things, or is it after they've found a property? Because I think a lot of buyers do one of the two. They're
Mm.
either in early or they're kind of in when they need you right at the end.
That is true, and the best time to contact a broker is when there's like a wind of an idea that you think you might want to do it. Then it's so simple. It doesn't take long. Like it's not like we have to have a 2 hour meeting and discuss this and that. It's just okay, what are your ambitions? What's your current scenario? Can we make this work? Yes or no? Yes, you can discuss long-term strategy and everything like that, and that's probably a bit of a different conversation. Um, but it's depending on your ambitions and everything. It's very easy to qualify and give you a roadmap of
Yeah.
what you need to be doing. So when you get wind of when you are thinking about it, that's the best time to contact a broker.
Would not agree more. Even as when I was an advocate, my first question was, have you spoken to a broker yet? And
Mm,
you'd be shocked about the number of times that they hadn't. And I'm like, right, let me put you in touch with someone, because
mm,
even to work with me, it's going to cost. So I need to know that, one, you can do
of
it, and two,
course.
you're comfortable with both. And now doing a Bodhi, this is why I like that system we've kind of introduced. Is it's something
Mm,
different for the people that don't, can't afford it. So I fundamentally stress this point all the time: is talk to the broker when you have the wind of the idea, where you're even just a mini seed in your head.
yeah, it's a no-brainer.
Oh,
It really
far out.
is. Yeah,
Doesn't cost anything up front. It's like just pick up the
costs
phone and,
nothing.
and have a chat.
You can
And
only gain information from it.
or just a roadmap, like you said, like a guide to say, okay, you're not quite there, or yeah, you're there. Here's what we need to do. And I think that's always
And here are
going
the
to
next
stop you from
steps.
making those kind of mistakes. Yeah.
Yes, here are the next steps. Absolutely.
And, this brings me to mistake 3, which is an interesting one. And this one scares the crap out of me because I saw it a lot when I was a real estate agent. Um,
Hmm.
Signing before finance is properly checked or even pre-approved. They have the subject to finance clause, which
Hmm.
protects them a little bit. But the fact that you're putting pen to paper without 100% knowing that you can purchase this property, there's so many risks. This is including the biggest one at auction, bidding at auction. I used to see that a fair bit. People bid, they win,
Hmm.
and they didn't know that they had to have unconditional finance approval. They thought they could have like a subject to, and I'm like, you've bought the
Mm,
house, you need to now make it happen. Otherwise, you're
mm.
up for a big problem. So
Yes.
this is where deposit risk can be real. What's
Hmm.
your take on that? I guess once a buyer finds a
Mm.
specific property, which is, like you said, common, what still needs to happen between that pre-approval and that final approval? And why shouldn't they just bid at auction and win without, checking if they can do it?
Yes. So before you attend an auction, especially for first home buyers, doing the 5% scheme, have to communicate with the vendor or real estate agent that we're doing a 5% deposit, and most of the time it's a 10%. So if you win the bid and you think, okay, sweet, I'm pre-approved, but I have a 5% deposit, and hang on, the vendor wants a 10% deposit. Um, Messy, very messy. Thankfully, we've never had
Yep.
that. We always inform our clients to make sure that a 5% is acceptable if they're doing a 5%. Regarding the steps between pre-approval and like unconditional slash formal finance approval, pre-approval assesses the borrower, not the property. Formal finance is for the borrower with the properties together and everything coming together in a package. So you might be buying one TBA Street, Doncaster. Usually pretty safe. Standalone houses, depending on the area, most of the time is pretty safe.
Mm.
But we could approve you for for a specific area or so that's pretty mundane. Yet you go and buy an apartment in Docklands, and most lenders want 20 or 30% deposits for apartments in Docklands. So you need to make sure that the property is an acceptable security by the lender, which is simple. If you have a broker, just say, hey, I'm thinking of buying this property. Can you make sure that they'll service for it? We had a scenario recently where a client uh, put an unconditional offer on an apartment, and this specific lender's policy that we were pre-approved with was anything high density they don't accept. So high density is considered to be 50 or more apartments. I think this complex had around 40 in it. So if it did have an extra 10 or so units in the complex, this lender would have rejected it. They called us, they made sure we verified, and it was all good to go. So just it just takes a phone call. The broker will do the rest of the work and give you the thumbs up, or say, hey, hang on, don't do this, or if we want to do this, we might need to switch up to this lender who will accept the security. So it just takes a phone call, a simple phone call in between the process to make sure you're not going to get yourself into a bit of a messy situation.
Like, I can't agree more, because even this week, like, my uncle's been hunting for a property for the last month, and he's been using a Bodhi and myself, and I said to him, I can help negotiate and do that deal. But even for him, he said, oh, how come I need to call the broker? I said, you got to ring the broker before you make the offer. Like, I said, I'm happy to ring them, but one of us needs to call, because I need to make sure
Of
that you
course.
100% can offer this amount. You can afford it. It's not going to break the bank. And then what am I negotiating with? That's more from a negotiation standpoint, just to know, hey, if we go up to this amount, am I going to kill you, or are you going to break the bank, or are we okay? And
Absolutely. Yeah.
and it's so quick, like, and it didn't delay anything. Like, the broker was like immediate, like saying, yep, you can go for it. Yep, this is your
Mhm.
max. I'd be comfortable doing, go here. Good luck.
Yeah.
And then we got the property this week. So he
Oh,
purchased yesterday,
well done
and
to him.
I was very happy with that. Yeah.
Yes. Yeah, nothing to lose by making a phone call.
100%. And I guess, what needs, in your opinion, what needs, like, to be checked before a buyer's, I know you mentioned a couple of things, like just that quick call to yourself, but before they make an offer, in particular, before it goes unconditional as well, like, I think there's that period of, they've made the offer, it's been
Mhm,
accepted, and now there's a lot of work for the broker to do between,
mhm,
you've been signed, congrats, exactly where my
mhm.
uncle is, and now we need to make it a reality. What are some of the things that
Yes.
buyers need to be really diligent of in that period?
It's nothing silly. You've been approved based on your circumstance. So as long as your circumstance doesn't change in that time, we should not encounter any issues. So look, that can be due to silly credit, you know, uh, missing, direct debits or whatever that we discussed earlier, not taking out a car loan in that time, between then and settle. These little simple things that, thankfully it's never happened to us before, but it does happen. So
That was good.
just
That was going to be my next
keeping your
question. Has it happened to you?
yes. No, nothing like that. No new debts. We always make that clear. But we've had bad credit come up in that time. But thankfully, we've always managed to resolve it somehow with a bit of hard work. Um, but yeah, nothing silly. Stick to what the bank has approved you with. They can, if there's been a long enough lapse in time between pre-approval and unconditional approval, they can request updated bank statements and payslips. So just as long as you're diligent, continuing on with your work, maybe more so for casual employees if there's been a drop off in hours or anything like that. These little things to be mindful of when you go from pre-approval to signing the contract to unconditional approval to settlement.
A quick pause, we'll be right back. Here's a word from one of our sponsors who supports the show. If you've ever considered investing commercially instead of residentially, then you need to have a chat with Michael Leipnick from Aston Constructions. Aston Constructions specialises in childcare as an investment strategy. They'll see through the project from development all the way to the end to renting it out. He works with investors looking for structured commercial opportunities beyond the standard residential path. If that's something you're exploring, his details are in the show notes below. Reach out and have a chat. And this brings me to our fan favourite segment, which is Reddit
Mm.
Real Talk. So
Yes.
for today's one, if you haven't heard before, we do a segment here where you guys, our listeners, thank you so much, send us different stories, whether they're your own or if someone else's you've read from different forums. We appreciate it. And then you want us to unpack it with our guest of the week. So this week in the hot seat is Azem. So I'm going to read out this story that was submitted to us, and I want to get your take and see how we go. So are you ready to
Sure.
get started?
Absolutely.
All right. So this one today is about the first home buyer worried about losing their deposit at auction. And it's been posted in the Oz Property Chat, and it reads, "Please help. I want to bid at auction as a first home buyer and not lose my life savings. Question mark. Scary to think that our deposit could be lost if the bank doesn't want to finance the property after we've won at auction. We're using the 5% deposit scheme, so can't do the usual 10% auction payment, but apparently we can ask the agent prior to auction if a 5% deposit is okay. Question mark. How can we go about ensuring our finance will come through if we win at auction? Does anyone have experience with this, either bad or good? With our current house hunt, I asked the bank to generate a property report for the houses we're interested in, and they give a low, medium, high valuation in that report, but those numbers are not necessarily used in the final/formal valuation. Some details are pre-approved by NAB for a $764,000 loan. Absolute max is $805,000. Both first home buyers in Vic, $107,000 deposit, 30K of which is tied up in super, which yes, we can access. Any help much appreciated. Sick of being limited to EOI homes only. Thank you so much." There's a fair whack there. Azem,
Yes.
what's your first impression?
Uh, I would say not not bullshit. Um, if
Mm,
they're stretching out a little bit, if- I'm going to take it back a second here. With the super, I would be very like I would get that out as soon as possible, because that can take
mm.
some time and it's not at their discretion. It is, but it's not, because they can take their sweet time. The settlement's missed, fees slash risk of what they're afraid of losing their life savings. So that is important. What I would want to know if I was them was, okay, they're doing everything right. They have a pre-approval. They've asked the real estate agent 5% deposit. Okay, yes, they have that thumbs up. So that's good. It seems like they're very cautious, so they should be okay. If they have a broker, it's probably a little bit easier because they can say, hey, I'm looking at this property. It's going to auction. Are there any risks? Is this a suitable security by the lender? Most of the time, it's okay. So the biggest risk for them from that point out would be the super. But getting having an understanding of what happens if the lender does not value this property at the agreed upon price. What I would want to know is, as the broker, if I wasn't confident on the valuation coming in strong, is okay. If this property you pay $800,000 for it, but the valuation comes in at 760, what's our plan? Is there a way we can pay the shortfall? Because that's going to come from your end. The bank's not going to fund it up to 800,000. They're going to fund it up to 760. So that 40 grand shortfall, especially for first home buyers with a 5% deposit, that's going to have to come from them somehow. So I would want to have a plan in place for that if that was to occur. If they're probably the
Mm.
biggest concern. If there is a plan B for that, then you probably have a lot more confidence. If there's no plan B, you'd have to proceed with caution, do our research, make sure, look at comparable sales in the area for similar sized homes. If everything stacks up, you've done your knowledge, you've done the background. We can always try different lenders to get different valuations as well. So there are safeguarding. That's probably as much safeguarding as we can do from that point out.
Well, really well answered. Thank you so much for your
Thank you.
take on that, because it was a lot that they kind of packed in there, but I couldn't agree more. I think it's the prep, and that super component, you're right, is so risky to leave to the last minute because, like you said, it's not at their discretion to kind of like say, oh, cool, I'll just draw that out today. And it makes the reality of losing their deposit even higher if they don't plan for that properly.
Absolutely.
Well answered. And I can't believe how quickly we have come to the end of our show already. And I need to get your final thoughts, but also your verdict on our
Mhm.
no BS statement of the day. So before I go to your final thoughts, I want to ask, I'll remind you first, the statement was first home buyers are often better off stretching a little for the right property than playing it too safe and missing the market. So, final verdict, do you think that's bullshit or not, and why?
Depends. If they're within their affordability, yes, they can go ahead and be reasonably comfortable. If they're going for the max and they're don't really have a plan of the upfront funds or anything like that, and that's one of the most silly things you can do. So as long as you've had your assessment and you're comfortable and you know the repayments and there's buffers and everything in place and maybe some safeguards, go for it. If not, speak to a broker, let them give you the information, and maybe it's not for the best.
Thank you so much for that. So we've got a neutral response, yes and no. So I like it. It's could be a bit of bull, could not be a bit of bull, depends.
Depends
so let's
on
take that away.
Depends on your circumstances, which is client by client circumstances, absolutely. Don't have to reinvent the wheel. Just speak to a broker. There's lots of us out there. Pick up the phone, have a call, have an understanding of your scenario, what you can do, what you can't do. It does not, within 10 minutes, you can have a really good idea of what is available to you, and you can build out a plan for a roadmap to purchase in 12, 24, 36 months, whatever it is. Just pick up the phone, work towards, understand the roadmap and work towards it. If you're qualified tomorrow and that's what you want to do, you're halfway there. You just set up the appointments, give the broker your documents, and the ball's rolling. But just have that plan and work towards it as best you can.
Thank you so much, Azem, for sharing so much wisdom with us. And it's been a good episode to kind of break down those top 3 mistakes. I think it's timely. It's end of financial year. I think a lot of people are trying to plan their next 6 months, and I'm trying to prepare everyone. And I think this was a good episode to listen to if you're about to buy. So thank you again for coming on and sharing your wisdom.
It's been a pleasure. Thank you so much for having me, Joe.
And to our listeners, thank you so much for tuning in. As I always say on this show, and as I'm even reiterated, it costs nothing to pick up a phone call, and know your options. So pick up the phone, give Azem a call and have that conversation. It could change a lot for you, and at least you get a next step or a way to go. And if you do want to get in touch with Azem, his details are on screen and in the show notes below, so please reach out. Until next time, this has been the No BS Real Estate Podcast. I'm Joe Agresta, and we'll see you next time. Bye for now. That's a wrap for this episode of the No BS Real Estate Podcast, powered by Abode AI. If you found this conversation helpful, don't forget to subscribe, leave a review, and share this episode with someone who might need it. If you're looking for more guidance on your home buying journey, you can visit www.abode.com.au for expert advice, property insights, and the tools you need to find the right home with confidence. If you're already on your journey, you can also download our app. Just search Abode AI on the App Store or Google Play. Have any questions or want to connect, you can follow us on Instagram at abode.com.au or send us a message. We'd love to hear from you. Thanks for tuning in, and we'll catch you in the next episode.